I'll introduce uh, the speaker here. Mr. Rahul Chari is the co-founder and chief technology officer at PhonePe. He's a serial entrepreneur in the consumer internet space and has built PhonePe into one of India's fastest growing and largest fintech companies. He has over 2 decades of experience in consumer internet and enterprise software space. Prior to PhonePe, he was with Flipkart and vice president of engineering. He left Flipkart and turned around through the acquisition of Amazon Inc. He spearheaded the supply technology division at Flipkart. In his role, he was responsible for building the best-in-class supply chain management system for e-commerce. Rahul holds a master's degree in computer science from Cambridge University and a bachelor's degree in computer engineering from the University of Mumbai, where he was a gold medalist. His work has not only shaped technology in regional India, but also times instrumental in setting new standards globally. Please welcome Mr. Rahul Chari. The session will be moderated by Professor Rahul Srinivasan. Professor Srinivasan is a distinguished academic and expert on strategic management. He has a doctorate degree from Management and has a rich academic background. He has graduated from the chairperson of PGP and PGPBA at Bangalore. So research focuses on strategies for multi-sided organizations, rapid growth firms, and competitive international strategies. Professor Srinivasan has co-authored a textbook on strategic management and book on management within the urban context. His work has been published in numerous international and national journals, and he has developed several cases among organizations. At Bangalore, he teaches competitive strategy, corporate strategy, and strategies for platform-related network, among other subjects. He is also well regarded for his executive education programs and has conducted workshops and strategic planning sessions for a range of multinational and government organizations. Please join me in welcoming him to the session. So the format of the session would be that there will be a conversation between Professor Srinivasan and Mr. Rahul Chari in the beginning. We'll open the questions from the audience after the session. Thank you.
Thank you, Manas. Good morning. Early morning for a Saturday, right? So thank you for being here. Thank you, Rahul, for being here.
Thank you for having me.
As we say, this is your IMB week. We're happy to welcome you back again to campus. So for the audience here, we keep talking about PhonePe, and a lot of us are users of PhonePe, consumers of PhonePe. What kind of a company is PhonePe? Is it a payments company? Is it a fintech company? Is it a technology company? Because we keep hearing that Uber says we are not a car company, we are a tech company. What's PhonePe?
That's a very interesting question. I get asked this quite a bit. Let's start with seeing everybody's awake. How many people think we are a payments company? Raise your hand.
If you raised your hand, keep it raised.
Okay, put it down. And who thinks we are a technology company? And the others think we are something else. No, so I think gun to head, we are clearly a technology company, right? Specifically, I think we are a platform company. I know it's a overused word, platform, but the best way to explain it is what drives us as founders is to build platforms that can actually deliver value at population level scale. I keep saying this because that personally what excites me. I also believe that when we are building for India, anything in the context of the Indian population, it has to be at a population level scale. Otherwise, it's very difficult to go beyond niche problem statements. We did payments because we were excited by the opportunity solving for payments creates for the country, right? The whole transition of India into a digital economy, I believe, starts from digital payments. For any business, moving away as much as possible from cash to digital payments creates I would believe, a national treasure in data that unlocks value for payments and for financial services, then beyond that for overall growth. That's why even if you look at our mission statement captured in our brand is Karteja Barteja, do more, grow more, right? Now, if we didn't have an opportunity to solve this using technology and building a population level platform, we wouldn't do it. And therefore, if you are married to the problem statement of solving payments, anyhow and whichever way possible, with or without technology, we would be a payments company. But the very fact that we are here to solve this using technology, building a platform that scales and delivers for the entire population makes us a platform company and a technology company.
So nice to see here this population scale. Quite a few founders do use this word population scale. I'm going to flip the platform argument with you. My platform regular question is, who is the consumer? Is the payer the consumer, or is the merchant your consumer? Are you looking at population scale for every phone should have a payments app, or every merchant should have a PhonePe account? Which is population scale for you?
I think population scale comes in with any platform play through some sort of network effect,
Right.
which is very standard, right? Unless you can create a network effect, you're not going to have a platform that is successful. Network effect comes from if both sides of the network are actively engaged. And therefore, it is difficult to say that we have one, which is the consumer paying using the PhonePe app as the only primary client and not the merchant, or vice versa. Having said that, I think the flywheel in our business starts from the consumer on the PhonePe app. So the difference being that, again, very used terms, we are a B2C platform. If I was to actually add that adjective to the platform, it would be B2C, business to consumer. If I was B2B platform, a Razorpay or another PG, I would start with the merchant. But because I'm a B2C platform, my flywheel starts from the consumer. The more consumers I have who are transacting using the PhonePe app becomes the reason why a merchant also, as the other actor in this two-sided network, wants to accept PhonePe. And therefore, that's why my flywheel starts with the consumer. So again, gun to head, I would say we've started with the consumer and then grown to become a solution partner to the merchant, and then now a true platform player for the merchant also. I think that's been our journey.
So now that you become a true platform for the merchant, what other services are you getting on back to the consumer?
So
how is the journey from payments to other services happen?
Perfect. So I think this question is actually very, very nuanced, and it actually explains in a way, the question itself explains our strategy as a group into all the products that we've got into. So we've started as a consumer player, which means effectively we started primarily with send money. Our strategy on day one, and I've had this conversation even with Professor earlier, was a very simple single slider saying that it's a send money, graduating to spend money, graduating to manage money, and then to grow money. That's been our product strategy or consumer strategy. Start with send money, graduate to spend. Spend is where the merchant came in. Once the send and the spend are both kicking in at high levels, which means effectively every consumer on an average is transaction more than one time a day, at least at a scale of, so today we have 500 million plus users. Our monthly active user base is more than 230 million. Our daily transacting base is more than 100 million. So at that scale of transactions, obviously the other side of the merchant also seeing a lot of transactions. Then we can actually graduate both the parties to the manage and grow, where it comes into financial services. So whether it is financial services purely from the lens of the consumer, which is like insurance, protecting your financial future by actually getting into term insurance or your car insurance, etc. Or it is insurance only for the merchant, like shop insurance. So then these parts of the pillars that work for both parties. Then there is this very interesting network effect of driving more transaction value to the merchant by providing short-time loans to the consumer that could be just in time, which is till-based loans or point-of-sale loans or personal loans or purchase-based loans to the consumer. And then there is the allowing the merchant to grow their business by giving them working capital loans, which allows them to say that I can hold more head products on a daily basis. These are like daily working capital loan merchants, really, really small sole proprietors. What that does mean is that the transaction velocity of even consumers who are looking for more goods from the same local merchant increases. So looking at beyond just send and spend and getting into these services on the financial services side further accelerate that flywheel effect between the consumer and the merchant. After that, we start looking at what are the adjacencies. These are not adjacencies. Payments and financial services are core. Adjacencies, the best example I can give is the pin code app, uh, built partially on top of ONDC and catering to the merchant. Now the merchant is saying, this is great. I can accept digital payments. I have access to loans to be able to increase my business. Can I now get more footfall that is not just physical, it is virtual, so that I can further expand my digital footprint or my online business? He's now suddenly starting to discover online businesses through digital payments. When you don't even accept digital payments, your thought process to be able to even go digital as a seller, etc., is limited. So then his imagination now goes to actually growing virtual footfall. And again, we come into effect there saying that that is great. So we have an app like PinCode where you can actually be a hyperlocal seller in a hyperlocal environment. Because of the PhonePe app, I do know who are the consumers who would be interested in you. So I can drive the traffic to you. So we are then using the same network effect to actually grow on their businesses. So if you look at it, the whole thesis that as a platform, if you're able to get large scale and network effect going, you can keep adding value to both the parties, interdependent to each other, kind of starts playing out.
Very good. So in fact, I'm hearing that you're not only growing money, we're also growing the business.
Yes.
With pin code and variety of other things.
100%. Because otherwise, my relationship is tactical with the merchant or the consumer if I'm not growing either the business for the merchant or going deeper into the financial relationship with the consumer.
And when are we getting more financial instruments on the PhonePe app? Insurance is one.
Yeah.
Are there other services? Do we look at mutual funds?
We already have mutual funds.
Do we look at other investment products?
100%. 100%.
Do we look at peer-to-peer lending?
So I think there is a very interesting Venn diagram of what all you can innovate on as a platform in the financial services space and what all there is clarity from a regulatory sector on where you can actually push the envelope.
Right.
As a company, we've always stayed away from identifying any white space and we're taking an arbitrage of white space. But where there is opportunity to see clarity and move into that zone with clarity to actually provide services, we 100% do that. So I would say all sorts of loans that we can play as a LSP, which is a loan service provider that is not licensed to make loans, but as is licensed, but to allow to actually work with licensed player to actually lead generate loans and originate loans for the partners, we 100% do it.
Okay.
Other examples of financial instruments, more and more things that open up on UPI. So UPI, what used to be a direct debit financial instrument, has by design transformed into pure infrastructure and rails. So now you can run not just direct debit, you can run pre-stored value, you can run credit, traditional credit cards, RuPay credit cards, new credit lines, which are really small credit lines, all of that will open up. So we take the opportunity to try and leverage the UPI rails as much as possible to bring new age financial instruments. And then to go beyond UPI, because PhonePe really is a payments container. We are known a lot for UPI, but today on PhonePe, you can use the PhonePe wallet. You can use debit cards, credit cards. You can use net banking. You can use UPI. So we are a payments container. So tomorrow I'm excited about things like CBDC, which kind of complements UPI in my view. UPI being everything that is credit and debit from a bank account or an issuer who's issued that currency, and CBDC being the equivalent of cash where the issuer is directly the Reserve Bank of India. And therefore to create pure tokenized offline experiences on CBDC and online access on UPI kind of completes the circle of holding your money in a digital wallet. So I think we'd keep introducing all of these as long as there's enough clarity or where we can see clarity and say this is something that we can get into.
Are we getting into also into remittances? For instance, is it possible for me to transfer money every month to my dad? I put a standing instruction for a 12 months. I keep sending money to my dad or keep sending money to my daughter.
100%. I think we are in fact going beyond remittances. I don't know if you read the recent news that the RBI governor, Mr. Shaktikanta Das, spoke about delegate payments. In fact, that's one of the things that we, along with a lot of people in the ecosystem, have been pushing for a while. If you look at the spectrum of where we can take UPI, there is the depth into the consumer base. There's a large number of feature phone users who are still coming onto smartphones. There are still pockets that are on the rural and beyond where the adoption will happen.
Yeah.
Then there are these segments within the existing deep user base, which is in the metros in Bangalore. They are young students who are yet to get their first bank account, but are young adults. Then there are senior citizens who are in a way the most vulnerable in society to actually social engineering frauds, to be able to do supervised payments where you can delegate. It's almost like a family
Add-on credit card.
Add-on credit card, exactly.
Pretty much like an add-on
With
credit
all
card.
sorts of controls, right?
Yeah.
To bring those in. I think beyond just remittances, which is just scheduled sending of money, to be able to have controls, supervised payments, all of that, I think you'll see a lot of innovation coming our way.
Wonderful. So how many of you think that they are a payments company?
How many of you all know what are all the things we do as a PhonePe group? So today we do payments. I think that's the most popular use case and app. That's the PhonePe app. PhonePe app itself has financial services in terms of insurance, mutual funds, and loans. PIN code is a hyperlocal shopping app, which kind of ties into the network story of driving more business value, virtual footfalls, and therefore revenue for our payment partners, the merchants. The PhonePe for Business app, which is the app used by merchants only for payment acceptance itself, has 14 million active users in the country, where they do everything from order their smart speakers, their QR codes, set up completely new stores, create agents, all of that. We have a stockbroking app called Share.Market, launched very, very recently, which is gaining great traction. And we launched some time back Indus App Store to compete with the Google Play Store, which is obviously nothing to do with payments. But if you think deeper, is a business that is largely driven by digital currencies and the use of digital currencies for virtual goods. So I think the way to look at PhonePe is to look at it as an extremely intelligent distribution platform powered by technology. Intelligence comes from the fact that there's a fair amount of data intelligence that gets aggregated. Platform comes from the fact that it's all built for population level scale. And then what are the kind of businesses that excite us as a group, which is basically solving at population level scale, open API problems is what falls under our umbrella of PhonePe. So that's what makes us a platform company.
I will come back to the data part of it, but let's start with the phone part of it.
Yeah.
Your brand is PhonePe. What is PhonePe? What is contrast? Computer pay, laptop pay, card pay, cash pay versus PhonePe?
So interesting story. So the word PhonePe came in. So I'll tell you why, when we started, the problem statements that we were looking at. We were looking at building a phone for India, really. We were looking at building a new age browser for India, saying that let's move away from the app model. If you look at it, the app model versus the browser model, I know this is a controversial statement. Most of you all won't even know what the browser model is. But when Microsoft front page was there, Netscape was there, you could put up any website, you could drive organic traffic, and you can create business. Now with apps, it almost becomes a way of paying your way to get your app installed for usage. So it was a much more democratized view to actually have only websites, to try to build a browser that would give back control of data, payments, etc. to the publisher. And then there was payments. We settled on payments because the opportunity was the most immense and the most transformational for the country. But our ambition always was to do more from the entire internet ecosystem for India. The word PhonePe was brilliant because we started with payments. So the wordplay with pay worked there. But obviously, PhonePe from the Hindi language perspective means on the phone. Why the phone? I think generationally, we've skipped the wired home connection, broadband, internet access directly to mobile. Even with all the kind of connected devices, I believe today and for the foreseeable future, the smartphone becoming more and more powerful with significantly higher edge compute is going to be the gateway to the internet and for services for a while. And therefore, what we do largely will be on top of the phone. So we are a phone as the primary channel company, primary, or will always be mobile first. Where, for example, like Share.market, where there is definitely a need to actually have a desktop product, 100% we'll have a desktop product, but we'll never be a non-mobile first company because we believe that
Even Share.market is a mobile first
it is mobile first with a desktop.
with the desktop.
Yeah.
Okay. Wonderful. I want all of you at the end of this session to go to open your browser, not an app, open your browser and look at PhonePe's data. They put out their data in a place called pulse.phonepay.com. Right? Not now. Don't do it now. Do it at the end of the session. The kind of data that PhonePe has been able to aggregate, the kind of hyper-local data that PhonePe has been able to aggregate is best showcased when you look at pulse.phonepay.com. What do we do with the data?
So I think, thank you for talking about Pulse. It's one of my pet projects, by the way. And I was hoping that when we do Pulse, a lot of companies will follow suit. I would love to see something from a Swiggy about a lot of the data continuously getting refreshed,
Exactly.
Ola, etc., where it will help the ecosystem. If you look at the Pulse data from a payments perspective, for example, if you're starting up on, I don't know, maybe food, and you see that, you know what, digital payments for food in these cities district is the best or the highest, it gives you a go to market strategy. As simple as that, right? It's as simple as using the data even for starting off, looking at what you want to do, and there's so much more that you can do with that. So really excited about that. We use data broadly in three ways. Most people talk about data from innovation from the consumer side. That is the obvious, and there's a lot of examples I can give. But the ones that I'm extremely excited about always is the kind of systemic efficiencies and product efficiencies that we can actually bring with data, right? I'll talk about systemic efficiencies. In the case of payments, and especially in a model like UPI, where we are really the orchestrator for a fairly complicated payment transactions that happens between the network, the debiting bank, the crediting bank, and us as a party, and potentially a third-party application which you can raise a request from a Google Pay that comes to a PhonePe as an acquirer, etc. There's a lot of chance of failures along the way. There's also instant reversibility, etc., is not always possible because it's like any and every bank in the country, and there are various edge cases that happen. To be able to use data effectively to as a predictive model to say what is the potential of success of a transaction, and basis of that allow a transaction to go through, not allow a transaction to go through, or to go into a self-healing mode where possible, gives us the highest level of success rate and the highest level of trust that the consumer can build with PhonePe. So that's why it's one of my most used use case when I talk about the use of data, right? And that clearly differentiates us from competition or anybody else from how successful or reliable payments are on PhonePe. Then there is the risk and fraud systems. For us, if I look at product efficiency and building trust, using data to directly do recommendations or what's the next best action are easy and visible. The ones that are invisible but significantly more important are things like our FRA systems, our fraud, risk, and abuse detection systems that use data very, very efficiently. So you're transacting. You are a user who typically transacts from location A, but we are seeing a transaction come from location B. Distance between location A and location B, between your last transaction from location A and a location B. Obviously, you could have flown overnight, so it's not necessarily a best indicator. But then what is your typical pattern of transactions from a value perspective? Who are the merchants you typically transact at? What are the categories of merchants? The merchant that you're transacting with, his or her history of transactions and chargebacks and fraud cases raised against them. Every fraud case raised against a person doesn't mean that the person or the entity or the merchant is a fraudster, but it's an indicator of what is the velocity, the time of the day of the month, day of the week, the number of various factors that go into determining whether the transaction is an anti-pattern or not is immense, and it keeps growing. To be able to have models that allow us in real time, in sub 50 milliseconds to actually respond whether this transaction is a go or a no go is the kind of work that we do with data. And that's what actually protects the end consumer, right? We keep measuring what is our transaction block rate and then what is the fraud rate. Transaction block rate is what we block. Fraud rate is what then gets reported as false positives or negatives against our block rate, and we keep adjusting our models according to that, right? That to me is a huge positive use of data beyond just the features that we actually build on top of data, which are much more visible.
This is not just end user protection, the payer protection, right? There's also about the receiver protection.
100%. Yes.
So tell me a little more about the merchant protection here.
So
Because it's the payer protection is pretty obvious.
yeah.
I make a wrong payment or somebody else is phishing my account. Tell me about the merchant.
So merchant protection comes from the fact that is the identity of the consumer who's making the payment a verified identity or not. And verified goes beyond just KYC. Verified goes to the point that an instrument that is being used by a person, are they authorized to use that instrument and have they at any given point authenticated themselves? Given social engineering on the India's story. So if you look at India, a very large percentage of the payments fraud is social engineering fraud. The very fact that we have 2FA, we have device fingerprinting, we have a whole bunch of fairly strong regulations prevent systemic fraud as much as possible, but it's much more social engineering fraud where people don't realize they give up their identities, they give up their device IDs, they give up their OTPs, all of that. So to actually ensure that account takeovers have not happened in line at the point that the transaction is happening on the merchant is protecting the merchant, because that will come either as a chargeback or even a FIR filed against the merchant by the actual consumer or owner of the financial identity. And that's where we actually use this predictive logic to actually prevent the transaction from taking place.
And given that RBI in with all of its this thing does not disclose identity of the payer to the payee, to the recipient. The merchant does not know what your identity
That
is.
responsibility is on us and the switch like UPI in between who are playing the orchestrator. We can't really say, you guys go resolve it between yourselves, because that is not, even if it may be a physical interaction where the consumer is at that merchant, I always have to assume that they don't know each other and that's how it has to stay.
Absolutely. Wonderful. At this point in time, let's open this for questions. Is there any questions that we have from the audience? Manas, choose.
So, sir, recently we've seen in news about the RBI's e-rupee project that PhonePe is trying to tap into. So, for that, I would like to ask you, there are, I guess, 4 more players who are getting into the same project, and there's limited space, I believe, to actually be a part of RBI's project. So, how do you stay on top of your competitors? Also, because when you started, you had not one, not twice, but 3 big companies who had the same kind of end objective around payments. So how is it that you stayed on top of it? And also how you envision e-rupee to help in your brand and taking it to the next level now?
So second part is easy, how we actually competed with a lot of large players. That's because we're just a much better product. No, jokes apart. Look, I think I'll answer the second part in terms of how we compete, because it is very interesting. We were up against, if you look at it, were up against and continue to be up against some of the largest tech platforms in the world. Now, trillion-dollar market caps by themselves, whether it is Google, whether it is Meta, whether it is Amazon. We were competing with all of them always. I think there are some clear advantages that we identified very early on. And while we are a platform and we are a technology company, one thing that we have not shied away from is to be a regulated entity in all the businesses that we are into and embrace regulation, governance, and compliance on that, and not stay a platform play and be on the periphery, just trying to enable this through partners. And I think that is a clear edge, because then you get to actually build some of this technology to the as close to your consumer as possible. And that's what makes our product more robust or reliable, in my view. Secondly, I think we are more nimble. It's just a fact. We are closer to the market. We are a homegrown company working in India, out of India completely. When you're actually competing with a large multinational, many times the decision cycles are slower. So that's also another thing that strategically worked in our advantage. We didn't have to do anything about it. The very fact that we were who we are and they are who they are actually makes a difference. On the first one, I don't believe that there are only 4 seats. I think you're talking about CBDC, the digital rupee. Which is the central bank digital currency. I'm not sure whether it's only 4. I think we are excited about CBDC. So are the other players who are working on it. Like I said, I believe there is a complement to UPI that is possible. We have to look at the fact that how can CBDC replicate cash as much as possible? There are still some advantages to cash, right? Anonymity is obviously the most widely spoken about thing. The fact is that let's take simple things like tipping. We don't realize that it's a very simple use case about tips. We don't realize how big of an industry tipping is, in the sense that there are many, hospitality aside, there are a lot of things that actually work, factoring the fact that as part of your overall wages, the tipping is there. Now, tipping with cash, if you had that note, it's still significantly simpler than even tipping by scanning a QR code.
So the industry is dead. In fact, the entire hospitality, people at the parking lots, people at the hotels are very sick of UPI because you actually pay exact amounts, 76 rupees, and you don't have cash to pull out and give it out to
So
the
I
parking
tip. So
lot.
I use UPI. I ask for the number, I enter the number and
But
tip,
that's
or
still
I scan a QR if they have the QR and tip. But that interaction is still an exchange of information,
Exactly.
whereas cash is just singular. Here you go.
Exactly.
Now, if we could do CBDC in a manner, just imagine if at all, and I don't know whether this is even possible today with CBDC, but these are things that can become possible. That's why we are excited about it. If it's a token exchange that is device to device,
Yeah.
and I can just take a token on my phone, swipe it off, and the token appears on the other phone that is at proximity.
Yep.
Now, that is a great way to actually simulate digitally what cash does.
Exactly.
And I think there are some of these that can potentially get unlocked by e-rupee. And people may think of tipping as a very basic use case. I'm talking about something that is not that important. It's very important. But you can build more and more on top of such things. And we get excited by anything that has potential in a very small manner, but at scale, because we know that then we'll discover 10 or 20 more such things at scale as we get into it. And that's what makes us get into these businesses.
And imagine tipping is 15% of the retail economy. It's not a small, it's 15% of the country's economy, right? That's not a small use case, actually. It looks very small, but it's not. It's a very, very, very big part of the business. Yeah. Any more questions? Manas, we have time till 11?
So good morning, sir. Bharat here from National School of Business. So this is actually a technology-based question. So what type of tech framework you're using to manage the PhonePe group? Because most of your PhonePe is based on tech and platform, right? So as an MBA student, we have this technology for management where we learn about agile and safe framework. So what type of framework? Because you have millions of like users, right? So how do you manage it, sir?
So if you're talking about the framework of how we actually build platforms or software development lifecycle, we don't really stick to agile per se as a framework. What we call ourselves is we are extremely iterative. So we are an iterative development company, which means effectively we don't have restrictions on what are our deployment cycles. We have pods. So the entire company works in something called pods. So recharge could be a pod, bill pay could be a pod, digital gold can be a pod, core payments is a very large pod. All of these pods work almost like a mini company within a company. They define the set of services, there's continuous deployment, they deploy almost on a daily basis. The app itself has fixed release cycles every 2 weeks. So each pod within the company decides whether they're going to jump on this release for the app or not. Otherwise, they take the next release. It's almost like a running train. If you're ready at the platform when the train comes, you get into it. Otherwise, you wait for the next train. So what that does is it unlocks continuous innovation within the company. Otherwise, it becomes very difficult at our scale to actually plan all of these various things coming together for a release. So that's the model that we typically follow. From a overall technology perspective, the other thing that keeps us agile, in the English term agile, is we try to SaaSify as much of what we do so that we can power new experiences. For example, user management and login by PhonePe. Login by PhonePe, you would have seen a Google login across a lot of websites, right? You're now able to actually use social login. You don't necessarily create and register. So internally, we have login by PhonePe. So that way, share.market, you can log in by PhonePe. Pin code, you can log in by PhonePe, which means these new products don't necessarily have to build the user management from scratch. Payments obviously is like that. Offers, promotions is an internal stack that can actually power CRM. So all that we have done to make sure our push notifications has the highest delivery rate in industry. We SaaSify that within the company, and that powers the push notifications for a pin code, the push notifications for share.market, etc. Which means that day zero products start with day 100th capability of PhonePe. So SaaSifying that internally also gives us that agility
And a high user base.
and a high user base.
Hello, sir. My name is Harsh. So, sir, my question is, how do you market yourself against the competitors such as PhonePe and such as Google Pay and Paytm, and how do you position yourself?
It's a very interesting question. I think it's a cluttered market, and positioning through marketing is it creates trials, but it's not necessarily the one that creates a differentiator. The differentiator comes from the product. And I know it's a cliched answer. Therefore, it's the long haul. Payments, unlike a lot of, say, e-commerce and all, which is price sensitive and driven by offers, you may think that cashbacks and incentives is what drives payments growth. It drives payments trials. After that, the best users stay back, because when it comes to your money, trust and reliability of payments always trumps incentive. And that at scale we have seen. So it's a long play, which means effectively, the best example is WhatsApp. Today, many times you make a call and you're not sure whether the call will go through, but if you actually call on WhatsApp, you're more guaranteed that the call will go through. Or you send an SMS, you're not sure, but if you send a WhatsApp message, highly unlikely you ever think will the message be delivered. And that has built because over time you've realized using WhatsApp that it is extremely reliable from messaging. We are extremely reliable from payments. And that is because each time you use and reuse, that basically gets reinforced. That's the only differentiator.
Hello. So hi, I'm Yagnesh from BIT Business School. So basically, my question is: with the rapid pace of artificial intelligence, how do you envision PhonePe using artificial intelligence to create entirely new product categories or disrupt the existing ones?
So again, one of the questions that gets asked a lot. My answer is a little boring though, right? I think when we talk about artificial intelligence today, we're talking about Gen AI and LLM specifically. Whereas machine learning and use of data is still in the realm of artificial intelligence. It's not sexy like Gen AI, but machine learning is artificial intelligence as an umbrella. Machine learning is deep neural networks, machine learnings, Gen AI, LLM, they're all artificial intelligence. We've always been using machine learning quite a bit. The example I gave of fraud detection is a huge example. We do like close to 300 million transactions in a single day. 300 million transactions in a day, to be able to do that, and for all the parameters I told you, you can't build a rule engine. The combinatorial explosion is so much, it's practically impossible. You have to use machine learning, right? So that we already use. Specifically coming to Gen AI, right? I think use of Gen AI in payments and financial services has to be cautiously done. There are examples that are easy to do, and I'll give you some of those. But if you go into things like lending, I think having explainability around why a particular person is credit worthy or not, but not having explainability is dangerous from a financial inclusion perspective. And therefore, we have to be cautious about those. But there are a lot of areas, one on the productivity side, from a entire software development lifecycle side that you can actually use Gen AI capabilities very, very well. Secondly, from things like summarization, conversational resolution of issues. When you have a very large set of FAQs and you want to make it conversational instantly and finding out the right one is difficult. Insurance, for example, asking questions on a policy before making a purchase. If you look at a life insurance policy or even a more health insurance policy, those documents will be at least 15, 20, 30 pages as a PDF. Pre-existing condition, not existing, uncle had it, auntie had it, anybody had this problem, all of that. To be able to actually, instead of putting the onus or burden on the cognitive burden on the user to say that, by the way, this is the product plan, read this entire document before you buy. People don't read, or if they read, it doesn't register. To be able to ask any question that you want and get an answer from that document, I think is a great use case. So those are the kind of things I think will actually disrupt.
Hi, sir. This is Ishwari. I wanted to ask, like, we talked about the network effects and how it helped PhonePe to adopt at larger scale. So Indus App Store has exactly opposite disadvantage considering the network effects and Android. So what is the strategic difference you are considering while promoting Indus App?
Very, very good question. Probably the best question and very right. I think haven't figured out the exact driver for the network effect yet. It's a distribution play. So I think the network effect will come in if we get distribution, right? And how do we get distribution in this particular play outside of advertising and marketing it very hard? We're still trying to figure out.
We'll take one last question now.
Hi, sir. I'm Naman, a first year design student. So I may not be as technically well versed with the financial or the technical aspect of today's session, but I had a question regarding the entrepreneurial side, or what was your day-to-day mindset like when you were building PhonePe, and were there any tips and tricks which you may have missed out on of what we here can take in our entrepreneurial journey?
Look, I think I'll answer what drives me, which continues to be a driver today, is basically I get excited by building products at population level scale. I know I keep saying this, but that's primarily what excites me. If there are products that I can build that have impact at a very, very large scale of users, the users being merchants, users being consumers, it doesn't matter, and is obviously then solving some problem for that very large set, that's what excites me. And the beauty about where we are in our time as a country and as a set of policymakers, regulators, specifically on DPI, right? The digital public infrastructure that we have, whether it was started with Aadhaar, then UPI, there is account aggregator, there's ONDC, there is OKIN from a lending perspective. I think there is so much opportunity to build innovative and population scale products that have mass impact. I think that's what keeps me very excited. Now, once you do that, the other thing that really excites me, and this is the one that is the most understated, I would say. Once you get to a level of scale, obviously the next 0 to 1 is exciting. Like, let's say payments on UPI is great. And then we could move to the next shiny object like ONDC. We don't realize that a percentage point improvement in a payment success rate is tremendously complex and difficult, and has significant impact because of the scale you're already at. I can launch 10 new products and it'll take me years to get to the scale that a percentage or 2 percentage point improvement on payments today on PhonePe can bring in. And I think many times a lot of entrepreneurs move on to the next problem statement that excites them and don't realize the massive impact that just continuously tuning your engine on the core product can happen. That really, really excites me. I think the one that is a learning is to keep looking at trends that actually are showing early tailwinds and to start over-indexing on them. UPI, for example, we took a bet when nobody was actually believing it in UPI, right? A lot of people are not sure UPI will succeed. But our simple thing was, if digital transformation on payments has to happen in the country, this is a once in a lifetime opportunity, right? So jumping on that. Same thing with trying to look at ONDC. When there are more non-believers on something that looks very difficult, but there are tailwinds. Tailwinds could be governmental push. Tailwinds could be early validation from consumer user, anything. It makes sense to try and over-index in that. Do that, give it enough time, and then, so don't even do a fail fast. I think a fail fast is overrated. Holistic thinking, planning it out and looking at milestones and pivoting, I think that is important.
If there was something that you regret doing or 11, 13 years ago, what would you have done differently? One small thing as a person.
I think so I had kind of two halves to my career, and I'm very
The
thankful.
employee and the co-founder.
The employee and the
The flip
co-founder.
from the employee to the
Correct.
co-founder, that's the point I'm going to take you to.
Yes, I would have done that earlier.
Okay. 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 At this note, thank you very much, Rahul,
Thank you so
for
much.
being here, and thank you very much.
I would like to extend a heartfelt gratitude to Mr. Rahul Chari and Professor R. Srinivasan for the insightful session today. Mr. Chari, your experiences and wisdom shared so generously with us have provided invaluable lessons in technology, innovation, and leadership. We would like to express our heartfelt gratitude to Professor Srinivasan for moderating such an engaging talk. We are deeply grateful for the time you have taken out of your busy schedule to be with us and for sharing your knowledge in such a compelling manner. Thank you once again for your presence and for making this session truly memorable. We would keep a present for gratitude to Mr. Rahul Chari. I request Professor R. Srinivasan to please do the honors. The stage is Business Secretary to please felicitate Professor R. Srinivasan. Guys, please be seated. Don't leave for the next 10 minutes. We have something. We'll let you know when to leave. वो क्या उनको करता है
ओके ओके वो लेके ना
हाँ।
निशा
चलेगा सर इसका मेल आईडी पता है क्या
है
क्या है इसका
ये इसमें ठीक बोल दो
मुझे बता देना कल ना एक इशू हो गया ना तो उसका मेल आईडी पता है
अरे मेरे नॉट में भी
ओके